All right, all right, all right, all right, all right. Happy Friday. I know I'm starting on time. That's like not normal, right? All right, I'm just waiting for a couple of people to join. So, welcome to Ask the Trader. If you have any stocks that you want me to analyze in about 40 to 45 minutes, go ahead and put it in the comment section. As soon as someone's able to comment and say that they can hear me, I'm going to go ahead and start. All right. Happy Friday. Happy Friday. But if you could go to the comment section for me and just say, hey, Joel, we hear you loud and clear. I'm going to go ahead and start. Happy Friday. Happy Friday. Happy Friday. Happy Friday. Happy Friday. Happy Friday. All right. So let me go ahead and start. Bam. All right. All right. Here we go. So, my name is Joel Harrison. If you're new to this is Ask the Trader. With Ask the Trader, what I allow you guys to do is you can put any stock that you want me to analyze, one stock with at least a $1 billion market cap. Put it in the comment section, and I'm going to try to get to everybody's stocks today. Now, today is a little bit different because I usually do. I used to do this segment a lot where we talk about different stocks that can make you a lot of money. So I'm trying to bring that back so that we can invest in some of these companies and try to hold them for over 10 years and make a lot of money on it. But let me tell you a little bit about myself. I am a full-time day trader. I am an expert in stocks, options, futures, and cryptocurrency. I have over 15 years and over 30,000 hours of trading and investing experience. And anything that we talk about today, especially today, are the opinions of Joel Harrison. The opinions, the opinions. These are speculative companies that we're talking about today. We might even talk about some that are penny stocks. So they're speculative. So do your due diligence. All right, let's go ahead and start. So again, welcome to Ask the Trader. If you would like for me to analyze any of your stocks, go ahead and go to the comment section. Now, if you're unable to comment, make sure that you go to my YouTube channel, which is What Would Joel Do, or go to my What Would Joel Do page or my main page on Facebook, and you're going to be able to comment and put those questions. If you're in the insider trading room or if you're in a group and you're watching this, you're not going to be able to comment due to how StreamYard is set up. All right. So you can also, we're going to be using Ask Joel GPT today. So this is something that I created for you. Any image that we see today, I actually created on Ask Joel GPT. We're going to be using the What Would Joel Do method. That's a method that I created. It's not to glorify myself, but it does allow you to go through a systematic way of knowing if you're investing or trading. So I created this so that you can ask yourself the questions before you hit the buy button or before you hit the sell button. Investing is a lifestyle. I hope you guys know this. It's a lifestyle. All right. Investing is a lifestyle. Everything around you is the stock market. Everything around you, anything that we talk about can affect the market. Politics can affect the market. So that's why we talk about just about any and everything in the insider trading room. I'm going to be talking about high level simplicity. That's my thing. I'm bringing the basics back. I'm bringing simplicity back because I'm a firm believer that if you simplify the way that you're trading and investing, you're going to make way more money in the future. You can go to my app. If you're struggling as a trader and you need to watch certain videos, or if you want to take part in my alert service where I'm telling people when I'm buying and selling things, go ahead and download the app. It's free. There is a subscription service. If you pay, I think, $19, you get the alerts. If you pay $50, you get access to all the videos. All right. And that's called the Ultimate Membership on the app. I also do $50 consultations. All right, they're 45 minutes and they're the best kept secret on the tube. You get to have a whole 45 minutes with me and you can ask me any and everything about the stock market. I don't care what it is. You want to learn stocks, you want to learn options, futures, crypto. You want to, you want me to look at your portfolio. You want to know what's in my portfolio. You want to know about what I've bought. You want to just talk. You can book a consultation with me, 45 minutes, $50. Best kept secret in the room. A lot of people, thousands of people have taken advantage of this service that I offer to you. Please go to my What Would Joe Do page and just hit like. Just like the page. I give you guys a lot of free content. Just like the page. I mean, like my YouTube, be a subscriber. Also go to my What Would Joe Do page on Facebook. All right. And again, please use my Ask Joe GPT. I am moving up the GPT with all the conversations that are being held on Ask Joe. If you haven't created your Chat GPT yet, you need to just go ahead and do it, especially if you're into information and having information at your fingertips as fast as possible. It's like 1,000 times better than doing a Google search. If you want your charts to look like mine, you're going to go to payhip.com/what would Joe do, because I'm going to show you guys my charts today. And they're some of the most beautiful charts and most clean charts that you're ever going to see. If you want them to look like mine, you can purchase this from my PayHip, and step by step, it will help you set up your accounts on the Thinkorswim chart setup. So, now that I got that out of the way, I want you guys to look at this. I want you guys to look at this money. I want you to take this in. Very, very important. Take this in, because this is what we're going to talk about today. All right. I like big bucks and I cannot lie. I do. Right. So what are we going to cover today? We're going to cover today, are you a trader or an investor? I'm going to do that in every video that we do. Scared money don't make money. All right. Scared money don't make money. You got to do the math. And we're going to be using the Thinkorswim platform that's offered by Charles Schwab. We're going to be using Yahoo Finance. A lot of the pictures that I took for this webinar is from Yahoo Finance. And a lot of the information that I received also was from Ask Joe GPT. So again, I like big bucks and I cannot lie. All right. I got to create stuff like this to keep you guys entertained, because, money can be boring, but when you're making it, it can be really, really fun. So I try to have a lot of fun when I'm educating you guys. But do you? I like big bucks. Do you? You got to ask yourself that question, because a lot of people that do consultations with me literally are like, yo, I am scared, Joel. I am very, very scared of the stock market. So are you scared? Are you scared? All right. You got to ask yourself that when you're looking in the mirror. And and look, guys, it is normal to be scared of the market. I'm even scared of the market, but there is a way to approach the market. It's not all or nothing. And I see a lot of you guys doing it that way because it's the easy way to go. Joel, I don't have time. I just got this little bit of money. I just want to get into the market. I want it to make me a whole bunch of money in the future, and I need to get back to my 9 to 5. It can be that easy, but there's a way to do it. That's why you guys got to come to me, and I can realistically set up, we can help you strategize on making money in the future. But a lot of you guys are scared, and scared money don't make money. It really doesn't. I don't care what you're doing, gambling, investing. A lot of you guys want to go the cheap route, which is fine, but scared money doesn't make money, and you need to have money to make money. Even if you start small, like I did with a little $100 a month. My kids, I put $100 a month in my kids' account every month. They have 5-figure accounts. They're going into college with 5-figure accounts. All right, kids, 17, 18 years old. Imagine where their accounts are going to be 10 years from now. And that's what we're going to talk about today. All right. So, that's why I'm here, to ask the trader. Any questions, any concerns that you guys have, put it in the comment section. once I get through these stocks, and we're only going to look at about 3 or 4 because I really want to get to you guys' stocks because I don't know everything. I know I'm intelligent. I know I made a lot of money and I made you guys a lot of money, but I don't know everything. And a lot of the times I need you guys' help to do research, bring stocks to me. We'll analyze it during these segments so that, we all have a chance to be able to invest in those funds as well. But, put those stocks in the comments section and I'll try to get to you guys' stocks as well. I'm only going to show about 3 or 4 today though. But, this is the biggest question that I always get. Well, Joel, how am I going to make this money? Like, I just don't know where to go to get this information. If everybody knew this, everybody would be a millionaire. And I always tell people, look, that's why I created the What Would Joel Do method. The What Would Joel Do method takes you through the basic process. And it's so simple that you're like, Joel, it can't be that easy. And a lot of the times it is that easy, right? In grade school, what did we learn? And I show this in every segment because this is the most important. These 5 questions are the most important thing that's going to make you money in the future. It's literally the most important questions when you're approaching any type of business. What are you investing in? When are you going to invest in it? Where are you going to invest in those funds? Why? Why are you doing it? And how are you doing it? And if you have issues with even one of these questions, that's why you can book a consultation with an actual trader and investor. And guys, y'all know me. I don't, when I offer this service, I might come in for 2-3 weeks, do one-on-one consultations, and then I'm off again playing golf or, traveling the world. So when I offer it to you, please take advantage. If you know others that want to take advantage, that's my way of giving back. All right. Again, that's at calendly.com/what would Joel do. Book your consultations. Let's talk about what you want to do and let's keep it moving. All right. Again, I show this over and over again because these are things that I put out there for you to help you out if you're having issues. A lot of you guys do not understand the power of the Chat GPT yet, and I'm trying to get you guys on board. I was the first to go on Periscope, and I was the first to be on not Insider, on Instagram Live. And I used to tell people how powerful these tools are. I was the first to be in the metaverse, and I'll be teaching this in the metaverse one day, right? But this is another tool that you guys have no idea how great it is, especially when it to help you invest in the market. But growth potential is one of the key things that you're going to look for when you want to make money in the future. And I know this seems like common sense, but it really isn't. A lot of you guys, buy stocks off of stock tips that you get from your cousin or your pops or your girlfriends, right? And you have no idea the type of growth potential that's in that particular stock. So we're going to talk about that a little bit today. My number that I always look at is 10x. Anytime I'm investing in anything, I want to make at least 10 times my money. All right. When I was younger, and I could only put $100 in something. If it 10x, that $100 one day was worth about 1,000. And then I could take that 1,000, reinvest it in something and try to make it turn into 10,000. That's where my kids are right now. They're investing $100 a month. My son Nasir has like over an 800 or 900% return in his Nvidia investment. So, imagine, being 17 or 18 and already having an experience of finding a stock that almost, grown 10 times its value, and you're that age. When you see that at that age, you believe the sky is the limit, and it encourages you to keep investing in stocks. But the reason why a lot of you guys can't get this 10x is discipline, not believing that the market can make you this type of funds, not talking to individuals that can make that have made these types of funds. And then you try to take the short, you try to take the easy way out and try to do options, right? And then blow your accounts out when You should be doing it all. You should be investing, you should be trading, you should be doing a little bit of options over here, a little bit of futures. You need to educate yourself on the market so that you can capitalize on the market. Most of you guys don't even know what market cap is. We are grown adults with money, right? Some of you guys are college educated, high school educated, just educated in general. It's rare that it's rare that anyone that I come in contact with that reaches out to me doesn't have the capacity to understand how to make money in the market. But 99% of you guys that come to me don't even know what a market cap is or a market capitalization. And you're investing in the stock market and trading and have no idea. You're taking these expensive classes. Those teachers are not telling you what it is. And this is where you make your money. Like, how are you? A lot of you guys are looking at the stock price and not how large the company is, because where you make money is how much that company inflates in value from its market cap. Yeah, you make money from the share price growing, but if a stock is a $40 stock, I don't know how big it is. I don't know if it's a large cap company or a mega cap company, or if it's done all of its growing by looking at the stock price, because they do stock splits all the time. The only way I'm going to know this is by understanding the industry and what the value of companies like that are worth. All right. And that's why I talk about this a lot. And this is very simple, basic, fundamental understandings of the market that a lot of us just don't get, which is surprising to me, because this is where you make your money. All right. So we're going to look back 10 years ago, because most of you guys are like, yeah, Joel, I see what you invested in, but that was just lucky, right? And every 5 or 10 years, I show you guys common stocks that you guys could have invested in and you could have made money. Now, I'm at a different level in my life where, $1,000 is not going to really change my life. Okay. It might change what I do day to day, but it's not going to change my life. So, I'm going to use numbers that I think we all can aspire to. So I always use the number 10,000, because 100,000 is a lot, right? I get it. To have $100,000 account, my kids have been putting together $100 every month, and their accounts are not at that level yet. So I get it. But 10,000 is attainable by any and everybody that's in this room. Putting away $700 or $800 a month, even if you're making $30,000 or $40,000 a year, putting a little bit away and letting that money grow in value, 10,000 should be that. 1,000 and 10,000 should be the base values that you guys should be using to invest in companies to kind of make a significant dent in your life. So I'm going to use the number 10,000. So 10 years ago, if we had $10,000, or if you had $10,000, let's see some of the things that you could have invested in. And I'm going to show you guys what Joel did. Not what would Joel do, but what Joel did. And what I talk about in the room all the time. Now, I know back in 2014, 15, 16, I'm always talking about stock, this, stock, that. Don't invest in indexes. That's not where you're going to make your money, because you're going to be scared. But the reality of it is that 80% of our assets really is in the S&P 500, right? So let's just say you had $10,000 and you invested it in the S&P 500. 10 years ago, back in 2014, 10 years ago, in August, the S&P was $200 a share. Most of us can invest $200 into the S&P 500. Most of you guys' portfolios, if you have a 401k and you're invested in something that mimics it, the Vanguard, just something that mimics the S&P 500. The reason why we use the S&P 500, because it's the most largely invested index in the world. And traders and investors should be looking at the S&P 500, at least once every day, just to see what it's doing, because it's telling you not only what your home price is probably doing if you own one, going up or down, but it's letting you know what's happening in the economy. The S&P 500 is the economy. It's the 500 largest companies in the world, and you get to see how they're doing collectively. If the 500 largest companies are going up in value, that's kind of telling you that these companies can't go up in value if the consumer is not buying their products. The S&P 500, guys, is 1% from being at all-time highs. And I hear a lot of y'all in the room complaining about the economy being bad. And I'm like, yo, the S&P 500 is like 2% away from being at the highest price it has been ever. And y'all are complaining Bidenomics and Trumponomics, and look at what the world's coming to an end. And I'm like, y'all obviously ain't talking to people that are invested in the market. I get that people are out of jobs. I get that COVID wiped away a lot of assets. But in the reality of it, if you're basing it off the 500 largest companies, the consumer is still here and the consumer is still buying, and we are at all-time highs. If you didn't know this, then it's because you're not educating yourself on what's really going on behind closed doors, and stop clicking on stuff on TV telling you that the world is coming to an end. Okay? Now, the S&P 500 was $200 10 years ago. Okay? Even if you had a little bit of cheese and you put $200,000 into the S&P 500, the S&P has been averaging 10% a year for the last 100 years. So let's say you put $10,000 into the S&P 10 years ago, 2014. That $10,000 would roughly be about $28,000 today. And that's kind of cool, right? Even if you start in a education account for your kids, you put away $10,000, by time they're 8 years old, by the time they get 18, they go to college, you got a nice little $28,000 cushion to help with school, right? Even though these days, that's how much it costs, a semester at some of these different places. I mean, I should know. I got a kid that's about to go to a school that costs $50,000 a year. All right. 10, 15, 20 years ago, if you told me that they were going to a school that was going to cost that much, I would have laughed. I would have said, oh, are they going to Harvard? Are they going to Yale? No, that's just how much it costs to go to the average school these days. All right. So you guys got to start for you guys that got little youngsters out there, y'all need to be putting away money right now. But even then, let's say you had $200,000. Let's say instead of going the stock route, you had 200 grand and you bought real estate with it, right? 10 years later, imagine that. A lot of you guys are like, man, should I buy stock with this or should I buy real estate? I get it. If you buy real estate with it and then you rent it out, you can make a ridiculous return on it. But a lot of you guys are buying homes that you already live in and you're not earning that extra income. And I'm like, yo, why don't you just throw it in the S&P 500 and that $200,000 can maybe pay off that house, right, in 2 years? Because if you had put that $200,000 into the market, that $200,000 would be worth $560,000. 10 years later, you could pay off the house that you just bought in 10 years. And I see all of these different calculations of how people could pay off their house. Man, if you pay one extra, payment every year, you can pay it off in 22 years. And I'm like, yo, if you have the assets, you could have just thrown that joint in literally the most basic tool out there and still paid it off in 10 years. A lot of you guys don't know this. And this is just, like I said, again, we don't know what the market's going to do for the next 10 years, but in the last 10 years, it's up 28%. But I always tell people, scared money don't make money. That is still, in my opinion, the scaredest way to invest in the market. Because although you're putting $10,000 away and it's worth $28,000 10 years later, it ain't really changing your lives. Yeah, it's a nice little down payment on a house. And don't get me wrong. All right, I know that I'm in a different tax bracket now, right? But I get it. It's a lot of money. Everybody doesn't have access to $10,000 or $28,000. And most of us are like, man, if I had $28,000 right now, it would change my whole life. Well, you got to start small and you can't be scared, right? I love the S&P 500, but what a lot of you guys are not doing is you're not doing the math. You got to do the math. If you know that an index is averaging 10% a year, I know people right now that are putting their money in all of these indexes expecting to be rich. And I'm like, these indexes are averaging maybe 10, 15. I mean, this one was averaging 28% a year for 10 years. You're not going to always get those high returns, but stocks go up that value like all the time. And I'm not telling you guys to put all your eggs in one basket. Remember, 80% of my assets is in something like the S&P 500, right? Our all the money that we've made, we want to protect it just like everybody else. But I'm conservative and aggressive at the same damn time. I'm conservative with my funds. I own real estate. Well, we own real estate. We have our funds in something that mimics the S&P 500, but then we're also very, very aggressive. 10,000 here, 10,000 there, 15,000 here, 5,000 there, and things that could blow up in value, because all you need to do is get rich one time off of one thing. All right. And most of you, I get it. You don't believe that it can happen because you don't think that it can happen to you, or you've never met anybody that has happened to. That's why I show receipts all the time. Not to show off, but I'm a big believer that if you see it, you can achieve it, right? Let's take Netflix, for example. I always talk about Netflix because this is one of those stocks that every single solitary person on earth can relate to. It's rare that you meet somebody who hasn't watched something on Netflix. And everyone could have invested in it. Now, I don't want you guys to look at this big number because this big number is crazy, right? That's all time. If you went back to 2004, I get it. Most of us didn't know about Netflix back in 2003, 2004. But we all knew about Netflix in 2014, 5, 6, 7 years after the real estate market crash, right? If you had $10,000 and you had invested in Netflix back when it was $68, it's now worth $100,000 in 10 years. 10,000 investment, now it's worth 100. If you invested $100,000, you're now a millionaire in Netflix. Everybody knows about Netflix. This isn't buying it when it IPO'd. This is buying it 10 years ago, back when my kids were, 8 years old. 10 years later, you've made 1,000% return. If you had invested $100 in it, okay, it's worth 1,000. You invested $1,000, now it's worth 10. It's still significant, and it's still something that you guys are using on an everyday basis, but you won't invest in it. You'll pay the subscription service every single month, but you won't invest in the stock. That's on you, not me. All right. But let's look at Bitcoin, because these are all the things that I have been talking about for years in the room. Some of you guys paid attention. Some of you guys didn't pay attention. Okay. 2014. I get it. A lot of us didn't know what Bitcoin was in 2014. I get it. But let's just do the numbers. If you had, maybe $10,000 here or there, you're putting it in different investments. Bitcoin was $377. Well, Bitcoin now is $61,000. A lot of you guys, about 85, 90% of you guys in the room was talking about how this was worthless, like it was nothing, that it was snake oil, and you missed out. And the biggest, one of the guys in the room that's seriously doing all the research on everything and seeing why he's investing in these. I'm sitting in the room like, guys, this is real. This is real. Look at these numbers. Look at these numbers. Look at the market cap. Look at the market cap growing. Y'all didn't know what market cap was. You didn't understand, why Bitcoin was what it is. You didn't understand how it moves. You didn't understand how it's going to be here forever. And now banks are involved in it. And now you can invest in it in your 401k. It went from a concept to real funds to something that's never going away. And you missed out on it. And that's great, because it's not like we don't talk about different stocks all the time in the room. You guys got to now start opening up and start listening to people that are actually buying the actual assets, and stop listening to the people at the barbershop or naysayers who don't even show receipts on what they're buying, or listening to people where Bitcoin, like, you're listening to the banking people or the financial people, and they're the ones that are against this, right? But check this out. Let's say we were talking about Bitcoin back in, this is 2018. 2018 is when I was talking about Bitcoin, not even 2014. 2014 was 10 years ago. 2018, guys, was 6 years ago. Six years ago. 2 years before COVID. 2 years before COVID. If you had invested $10,000, if you had invested $10,000 in Bitcoin back in 2018, you would have made 1,000% return. I came in the room. I told you guys, look, I'm buying Bitcoin. It's $5,000. I got it. I'm going to buy it. I put $10,000 in anything. $5,000. That $5,000 went up to $60,000. I think I got the wrong slide here. But Bitcoin ran from $5,000 to $60,000. All right. And that's 1,000% return. If you had a $10,000 investment, it's worth $100,000. Now you guys understand that when I invested my $5,000, it went to 50. And when it went to 50, I sold. Why? Because I made my 10x. Because I used the what would Joel do method of investing and trading. I have a strategy. I have a system that works for me and my family. All right. Now let's talk about NVIDIA. I know y'all got a peek at that one. Let's just look at NVIDIA, because back in 2014, after you guys got to also remember, after the adjusted stock splits, NVIDIA was 49 cents. All right. Now NVIDIA is like what, $100? If you had invested $10,000 in NVIDIA at that particular time, you would have made an obscene amount of money. $10,000 investment 10 years ago, it'll be worth $2.5 million. That's a real number. $2.5 million, 25,000% return. And what's interesting about that is, 2014 was a long time ago. I get that. But let's say you invested in NVIDIA March 2020, when you just started to learn about maybe stocks and investing. Now, this is when I was doing videos like every week, because I had nothing else to do. So I'm in the room. I'm trying to educate everybody on investing in the market. Now, 2020 was just 4 years ago. 4 years ago, when the VIX hit now mind you, the VIX just hit 65. Y'all know that the VIX hadn't hit 65 since March 2020. It's been 4 years since the VIX hit 50. If you were using the what would Joel do method, you bought NVIDIA 4 years ago, $10,000 investment. NVIDIA was $6 a share. Now, y'all know what the stock price is today, 100 and something, right? 4 years ago, it was $6. Here's what's interesting too. All the videos that I put out in 2021, 2022, I was explaining to you guys the infrastructure bill. What's in the infrastructure bill? The infrastructure bill said, Biden was like, we're going to put all of this money into the semiconductor space so that we, America, can be number one in semiconductor production, because we relied on Taiwan for all of our semiconductors. And America, for the past 10 or 15 years, is trying to get away from using oil from other countries, from using, natural resources, from using anything. We want everything to be in-house. All right. So it was almost a no-brainer to invest in the number one company at that particular time. A lot of you guys missed out because, I don't know, I guess you guys don't trust the people that are in the room, because you could have made a 2,000% return in 4 years. A $10,000 investment would have been 200 grand. And there's multiple people in the room that had over a 2,000% return. And here's what's crazy. The only way that you even knew that they had done it was because I put out a receipt post and they felt safe enough to put their percent returns in the post. Okay. All right. Just because you feel some type of way about what you're doing in life doesn't mean that every freaking post that everybody has is uneducated. You can't find any type of education about it. And I always tell people that I don't care what anybody posts. I can educate myself on any post that anybody ever posts. Somebody can come in there and say, I made $500 million off of some Apple options. And if I see the date that they bought it, I can literally go back, research it, and figure out how I could have made money. And I could care less if that person posted that information to get the type of love that they may not get it home. But you guys get so irritated and evil about people posting stuff. You don't even know how to make money in the room. And that's what eats at me. Every single solitary post you can make money off of if you know what to look for. I don't care what and why somebody did something. That's not my business. My business is about making money for myself and my family, period. All right. So you guys got to stop being that way because you're missing out on money because you're shooing these people away. And believe me, I'm still getting the information because they'll just DM me and we'll have conversations, in direct messaging. But y'all miss out on that because they're afraid to show you what they're doing because y'all come out and attack everybody every time they show some type of receipt, which is ridiculous to me. It literally is ridiculous to me. That's why I rant all the time because, at my age, I just don't like seeing. I want to educate people, but it's the ignorant people that are stopping it from happening. And I always say this: look, if you're not invested in something or you have money on the table, you shouldn't be saying anything about a stock. Stay in your own lane, stay in your own skirt lane over here and let everybody over here make money because you're missing out on information. And I keep trying to tell y'all this over and over again. All right. So Nvidia, that's my rant for the day. Nvidia ran up 2,000%. Multiple people made money off of this. This alone made a lot of millionaires in the room, and a lot of you guys missed out on it. And I talked about this every single thing there every other day. It's in every single one of my videos. You just missed out on it. All right. So growth potential. That's what we're looking for. Growth potential. All right. Growth potential. How do we know about growth potential? Well, first of all, we got to look at the market cap. Now, what we're about to talk about now is very, very speculative. I do not want you guys to run out there because I know I can hype you guys up and you go take a $10,000 loan and put it on any of these stocks that we talk about today. I'm going to try to do this every other week and I'll show 3 or 4 stocks. I got a whole list of companies that I'm looking at that I can make a whole bunch of money that I'm throwing 10,000 here and 10,000 there. Okay. But what I would like you guys to do is I kind of want to put it on your radar, right? Put it on your radar like we did with every other stock, and then come to me to kind of figure out how to invest in these particular companies. You don't always throw all your eggs in one basket at all times, right? You might throw a little bit at it, and if it drops, throw a little bit more. And if it drops too much, sometimes you might have to just sell it. All right. So there's a different strategy when you're dealing with something that you want to invest in long term that you're going to try to get 10x out of. So let's talk about some of the different areas that I've seen that's growing, that's been making me a whole bunch of money. Fast casual. It's a new word that a lot of you guys don't understand that you need to start picking up on. I don't know what it is about what happened with COVID, but well, I know exactly what happened during COVID. A lot of if you drive around anywhere in America, you're going to notice that most if you drive around in America, you're going to see a lot of commercial development, right? You're going to see a lot of boarded up places. Like there's boarded up Chick-fil-A's in Georgia, which is crazy. I've seen Chick-fil-A board up one Chick-fil-A and then build another one right across the street. All right. But there was a lot of companies that were borderline trying to stay open, and then COVID took them over the edge. And then you have these newer companies that are coming in that are growing, and all they're doing is taking over that commercial space and growing as companies. All right. One of those companies is Kava. All right. I know y'all hear about it all the time on TV. I'm so mad that we missed out on it because it's up 20% today. All right. And this is something this is a company that I've been talking about probably for the last 6 months. All right. Kava is related to Chipotle. Well, I wouldn't say it's related to it. It's kind of like one of those companies. Now, I get it. If you don't eat healthy and you're not into that healthy Mediterranean style food chain eating type, I get it. I get it. I get it. I'm all about Chick-fil-A, even though I can't invest in Chick-fil-A, but it doesn't mean that I can't make money in it. And Chipotle was one of my number one companies I talked about all the way back, even when they were having the rat issues. And I was like, Chipotle, y'all don't believe me? Go into the insider trading room, hit the search tab, and you'll see that I was probably one of the only people in the room talking about Chipotle. Well, Chipotle grew in value at 10x, 20x, and made a lot of people a lot of money. Well, Kava is similar. They have the same aura about them where they could be that same type of chain. Now, you're going to have to sit in it for a while, and it's up 20% today. What I usually do when I see companies like this that are growing that I want to invest in, I wait until they drop 30 to 40%, and then I'll take a shot at them, which is interesting because I was gonna take a shot at them just recently, and I did buy some, but I didn't get my full position in it. The What Would Joe Do members got the alert for when I bought Kava about a week ago, but most of you guys in the room didn't. All right. But let's talk about Kava. Kava, let me take these glasses off. Kava is a fast casual Mediterranean restaurant chain based in the United States. And all of this information you see on the right side of my screen, I got from Ask Joel GPT. Okay. But the most important thing about Kava is this right here. Now, a lot of you guys are like, 11 billion is a lot of money, Joel. No, it's not. Not for a restaurant chain that can grow. And if you listen to their last earnings, you're going to hear that they're up 30%. The street got it wrong. They made, I think, double what they thought they were going to make from last earnings, which is crazy. And again, if I'm wrong, do your due diligence. But as you can see, before yesterday, the stock had been going up and up and up and up in value. But what I like is this $11 billion number. Okay. Why? Because Chipotle is $100 billion company. All right. This company can grow in value. If it can grow to $100 billion in size, if once you start seeing Kavas on every corner, then you can start saying to yourself, oh, you know what? Maybe this company can't grow anymore. But until you see it in your neighborhood, this company is going to continue to grow and grow and grow. All right. Some of the reasons why it's a good idea, I believe, to invest in this company is the growth potential. All right. They're aggressively expanding their footprint across the states. They got a strong band and a loyal customer base. Anybody that eats at Kava, just go in the room, ask in the comment section. They love it. I don't particularly eat it, but it doesn't mean that I can't make money in it. And there's a lot of fast casual companies that I've been investing in. Maybe I'll show you guys Shake Shack, Wingstop. These are my three favorites that I've been investing in. So you guys need to write down fast casual. Keep that on your radar because that particular space is growing. I believe they went and bought out a bunch of the Zoe. Y'all remember the Zoe kitchens? Y'all don't see the Zoe kitchens around anymore, right? Kava has started to occupy that space. All right. So it's a rapidly growing company. The market cap is low enough. I'll probably wait until it pulls back 30 or 40%. If not, I'll just sit back and wait. I still have my Shake Shack that I'm invested in, and I have my Wingstop, and I got about a quarter position in this company. But if it ever pulls back 30, 40, or 50%, I'm probably going to go all in. Or if you ever see that VIX creep up around 20 or 30, that's when you invest in companies like this for a 10-year investment. So put that on your radar. All right, artificial intelligence. Everybody knows about AI, right? AI this and AI that and AI this and AI that. Well, everything has gone through the roof that's involved with AI, right? So I tried to go through my list of companies that I trust because, I mean, every company is involved in AI, whether it's Google, Facebook, Meta, everybody says that they're AI, right? So, I wanted to try to find a company that I felt can still grow. And I talk about them all the time. I think somebody has already added it as a stock for me to look at later. And that's fine, but it's Palantir. Now, Palantir, guys and gals, is overpriced in my opinion right now. I would wait until it drops 40 or 50%, and then maybe invest in this particular company. But if you don't know what Palantir is, and we talked about it in my last live, it's just an American software company that specializes in big data analytics. What it does is it takes these like, think about the government. Y'all know the government is slow as hell, right? Post office, all of these different companies, anything that's government related is slow. So they need companies like Palantir to come in with their AI tech, and then the AI that they use, and I forgot the name of it, but the AI that they use kind of speeds up the processes that a normal person was doing at the company. So they'll come in, they'll try to speed up the information so that the company can be a little bit more efficient. One reason why I really, really love this company is because they have a government contract, right? Anytime you have that government money that's coming in, and you see here they got high profile government contracts with the CIA, the US Department of Defense, that's guaranteed money that's going to continue to come in. And usually when companies work with like the government, it's kind of like the mob. Like once you start working for them, you can't really get away. And if you mess up, then they gonna be like, all right, you messed up, but you can't just go away. So, I can't see them getting fired. I can see them maybe lowering their costs if they ever mess up. But, with these government contracts, that's guaranteed money that's coming in. And then they can use that to get other jobs. They can say, look, we work with the government. If the CIA and the FBI or the Department of Defense is using our tech, why wouldn't you? Right? So I do believe that it's overpriced, looking at its market cap. But I think in the end, its market cap is $70 billion, right? It's kind of high. Its PE ratio you're taught to buy things that have a 20 to 30 PE ratio. So it's a growth company, but I think it's gone too far too fast. And even if you look at the chart, you know, what I liked about Palantir was when it was in the $10 and $15 range. And I've been in it since then. And now now I've made like 100% return in the stock. So now I'm chilling. But remember, I got in early and I was in the room telling you guys to buy this. This is one of my favorite stocks. Y'all should be buying this. And now we're back to a 5-year high. What usually happens when you see companies like this hit their 5-year high is sometimes they sit there for a while. But this is a 10-year investment for me. 10,000, maybe worth $100,000 one day. 100,000, maybe you'll be a millionaire one day. All right. But I would wait, if you're not in it, for it to drop 20 or 30 or even 50%, or when that VIX hits 30. Put it on your stocks to buy if the volatility index goes up. All right. And this is one of my favorite AI plays. All right. Crypto mining. I know you don't believe in crypto. If you don't believe in crypto, all right, crypto still has to be mined. And by it with it being mined, there are companies that, do the mining. And the mining is done, with computers, with all other types of equipment, so that this crypto can move from one, person to the other, if you understand how that works. Well, they've been talking about crypto mining lately, and one of the companies that I've been investing in is a company called TeraWulf. Now, why am I investing in a company like this? Well, the biggest concern with crypto mining was the amount of energy that it uses to mine, and that it was going to be a problem in the future. And everybody kept saying how crypto is going to go away because they got these big storage houses and they're going to overheat, and then there's not enough energy and it's going to blow up, and then crypto is going to go away. Well, we knew that in time, just like with anything, just like with a car. Like, you wouldn't buy a car that's 50 or 60 years old because it'll overheat, or a computer can overheat. But nowadays things are a lot more efficient. Well, this company is leading the way, in my opinion, to a better way of mining. It's more efficient. And they use a lot of like solar power. They use a lot of things to kind of keep the energy down. But one thing that I love about this company is that it is only worth $1 billion in size. Ooh, ooh, ooh. When I see companies that are worth $1 billion, it I salivate, because that's that number that usually makes me a lot of money. $1 billion to 10 billion, you just made 10 times your money. And in the stock world, $10 billion is not a lot of money. It just really isn't um for a company that's on the New York Stock Exchange. It's just not a lot of money. $1 billion just gets you in the door. Anything less than $1 billion is considered a penny stock. But this company can grow to 10 billion and still be under the radar, right? And that's why I kind of like this company. But there's reasons why it's a good idea to invest in it. They got sustainable Bitcoin, they got a green energy focus, like I talked about earlier. Environmental, social, things that they're using to kind of keep the energy and the power down. But again, this is like one of those companies. Like I said, I don't want you guys to go out there and throw all your money in it, because everything that we're talking about is speculative today. Can this company grow and be the leader in this space one day? This is how people become very, very, very rich off different companies, right? When you become the leader in a space and you get all the money, and Wall Street gets a hold of you, that's how companies can go from 1 to 10 to 20, like a Palantir or an Nvidia or even Bitcoin. All right. So keep this company on your radar. I think I got one more to show you guys. Uh, and these are different sectors. Bitcoin mining is popular. Nuclear is popular. All right. We don't talk about nuclear companies using nuclear these days. Nuclear is very popular. Fast casual, popular. AI, popular. Well, GLP-1 weight loss drugs is just as popular as AI. Most of us have friends, if you're not using it yourself, they're using these GLP-1 weight loss drugs that is also helping with diabetes. All right. A lot of people are taking this weight loss drug pills, and there's so many different ways that they're bringing this thing out. And I got to be honest with you. I was doing a consultation with an individual, and they brought this next stock to my attention because I was trying to buy something in the space. I saw Lilly was overpriced. I saw Novo Nordisk is overpriced. You know, People took a shot at Pfizer because Pfizer said that they're maybe about to get into it, but these companies are still big. Pfizer, Lilly is like eight or $900 billion in size. It'll be $1 trillion company one day, but that doesn't mean you gonna make $1 trillion. It's only about 10 or 20% away from there. Novo Nordisk also grew in size really, really fast. So, I like to find companies that are 1 billion, 10 billion in size that are in that particular space. So, someone brought this company to my attention, which is called Structure Therapeutics. All right. GLP-1, very, very popular sector. So, there's a lot of companies that are trying to do their thing. So I tried to weed a lot of those companies out and tried to find the best or companies that did something a little bit different. All right. So this is one, and it's the ticker symbol is GPCR. All right. But they're in that particular space, and you can do all the research that you need. But what I really like about this company, y'all remember that 1, 2, 3 billion dollar size? You remember Kava was only like 11. I was telling you guys about Shake Shack and Wingstop when they were 1 and 2 billion in size. Well, this company is $2 billion in size, which is my sweet spot, which is why I love it. I love companies that are right around that 1, 2, 3 billion. All right. Yes, the company has been as high as $75, and now it's about $39. Usually that's around the time I like to invest in things. It was $75, it dropped 50% in value. The volatility index just went off. Maybe I'll take a shot at this company. If the GLP-1 space grows even bigger, companies like this are going to benefit from it. All right. Don't throw all your eggs in one basket, but this is a company that you can put on your radar, or you can start researching this particular space. All right. Cool. So I think I got that done because I wanted to do this for the first hour and then get to you guys' stocks the second hour. But it's a very good I always felt like it was a very good investment, even though the stock can be very, very, very volatile. All of these stocks that we talk about that can grow 1,000, 2,000, 20,000%, you guys got to expect that at some point it's gonna drop 30 or 40 or 50%. That's just how it is. All right. And when it happens, you either, you got to take the pain of it or add to your investment. That's how you invest in things like this and be able to withstand a lot of the volatile movement in it. But again, if none of this stuff is making sense to you, you can always book a consultation with me at calendly.com/what would Joel do. And you can, you don't have to suffer in silence. You can come to me. I talk to any and everybody. I know I say this and I say that, and I know that I can be overly aggressive on these talks, but I'm here to help you. And if you're embarrassed, or even if you're not embarrassed, like I said, you can book a consultation with me and we can talk about these things. All right. So let's get to you guys' stocks. If I want to look at some of you guys' stocks today. So, with Ask the Trader, you know, you're supposed to give me one stock that's $1 billion in size. But I would like to kind of analyze a lot of you guys' stocks that you think might be the next big thing in the future. And today, if that company, I don't want to say if it's a penny stock, but if it's like 700 million and it's almost close to a billion, I'll still maybe take a look at it. But don't show me any stocks that are like 20 million or 50 million in size. I still can't do that as an influencer. All right, so let me go ahead and pull up you guys' comments and let's get to business. Hold on, let me go back real quick. Let me minimize this, pull up Yahoo Finance. We got Chat GPT going there. Let's pull up Yahoo Finance. And let's get to business. All right. All right. So again, Joanna said, "Hey, Palantir and happy Friday." So let's go ahead and pull up Palantir. That's the first stock that we talked about today. And I'm going to try to do a better job with taking some of the comments off so that you guys can see the screen. I kind of made it smaller today because I know a lot of the bottom half of the screen you guys can't see. But let's look at Palantir. All right. Palantir. Y'all see this? It bottomed out. It was a stock that used to be $45 in price and it bottomed out. I love to see this. It rounded out and the 200-day moving average started to go up. Now, if you are investing in something, or if you want me to look at a trade that's, 2 weeks, 3 weeks, 4 weeks, go ahead and write that time frame next to that stock. So I don't want to look at a stock as an investment if you're looking at it as a trade. And it's important to me that you guys start to understand what a trade is and what an investment is. All right, a trade is, day trading is anything up to 7 days. So if you're looking for a day trade, that's fine. I'll look up day trades for you. Anything more than 7 days, all the way up to a year, is considered a swing trade. Anything after 12 months is considered an investment. All right. There's 3 different strategies to do it. Okay. And that's my job, to try to get you guys to understand what trading is and what investing is. Investing is buying things when they're 50% off and try to make some money on it in the future. But I got to give myself some time. A lot of you guys are not giving yourself enough time, and you're using investing strategy to kind of trade. Oh, I'm going to buy this 30 or 40% off too, Joel. And then after 2 or 3 weeks, you're wondering why it hasn't gone up in price. Because when a stock drops 30 or 40%, it takes time. It's like when a stock loses 30 or 40%, think of it like Tupac. Tupac got shot, right? If Tupac gets shot, Tupac ain't going to be at the club next week dancing. he's going to have to heal himself. And it takes time to heal. And then he'll be at his, peak 3, 4, 5, 6 months from now. But anytime a stock drops like that, it's injured. It usually doesn't just bounce back. It takes time. You see, Palantir did the same thing. Great company, bottomed out, got government contracts. People started to understand what the stock can do. And then even once it started to go up, it stair-stepped up. And now we're here. Now we're at $31. The all-time highs were 45. So you got a really good company. And now fundamentally, it should start to go this way. But just because it's going this way doesn't mean you buy it today. As a trader, you use the what would Joel do method, 513 cross. You got about a 10 to 14 day trend. Bam, look at there. That's here. That's blue. You make some money 7 to 14 days. But what's probably about to happen? This is where a lot of you guys get caught because you're not counting. All right. I was very good at spades because I used to count cards. All right. They throw people out of Vegas because of counting cards. Y'all ain't counting how long the trend's been up. That's why even some of you super advanced traders don't know how to trade. You got all this education, and then I ask you, what day are you in on the trend? Well, Joel, I've never thought about that. Well, how can you not think about that? Things don't go up forever. Like there's an average amount of time that things go up. I didn't know that. I just thought things just go up and things go down. That's why this is like a magic show. Every time I put this on, every single stock we look at today, read my lips, every single solitary stock we look at today is gonna pretty much have the same pattern. I know y'all don't believe it. And I say this every single time I show stuff. Investing and trading is easy. Y'all just haven't known what to look for the past 15, 20 years because you get too complicated. You're taking these expensive classes and the focus is not on making money. It's on making that person money. What day are we in on this trend? About 10, 13 days. What usually happens after about a 10 to 15 day trend? Well, when this look, count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and then oh my God, it went down. You think the company just all of a sudden after 14 days stopped making money, stopped getting government contract money? Nah, it's just what stocks do. Y'all just figuring that stuff out now. Stocks don't go up in a straight line, they stair step. So now it's up. And now it's rounding out and it's probably about to do this. And then a lot of y'all who bought it for a 10-year period, I was on this live with Joel and I had about $15,000 on the side. And then I bought Palantir at 31. And then 4 days later, it was at 27. After what would Joel do method? It's trash. No, you're trash because you don't understand how to trade. And you bought it as an investment. You have to expect that it's going to go down in value. It's just that y'all don't know how to do the work to figure that out. Stocks stair step up and down. When you have a stock like this that can make you a lot of money in the future, it might drop. Let's see what percent that's going to say. It might drop 10 or 15%. Okay. 18%. This stock can drop 18% and still be bullish and then go back this way. You don't believe me? Look at what happened here. It went up in price. Man, I bought it on this day and then all of a sudden it dropped 13%. What's wrong with the company, Joel? Nothing. But why did it drop 13? Don't when companies drop 13 or any percent, that means that there's something wrong with them? No. It's just what stocks do. That doesn't make any sense. It does make sense. Supply and demand. The price has to come back down for more people to get back in. Anytime you see a stock that's off 10 or 15%, it's on sale. Just like if you were buying real estate. Just because real estate, my parents bought a house back in 2000, back in 1978. for $50,000. The house today might be worth 500. They up 1,000% in their real estate. Now, do you think it just went in a straight line to 500? Nah, because we have to include COVID. We got to include the 2008 financial crisis. Was there anything wrong with the house? Nah, four-side brick home, acre of land. But why did it go down in price, Joel? Because that's what things do. Y'all just got to understand when it's happening. And if you don't look at charts, how you going to figure that out? I never thought of looking at charts. Of course you didn't. That's why you're here today. All right. If you want to be a great investor or trader, you have to understand the fundamental side and the technical side and mesh it. You combine the fundamentals with the technicals, you become a funda technician. That's my word. That's when you become a super trader. You keep it simple and stop putting 15,000 indicators on your charts. You might someday make some money. Put in the work. I teach this to fifth graders. All right. So that's Palantir. This is what's probably going to happen. How many of you guys would buy it when it gets to here? I guarantee 75% of y'all won't. You know why? As a trade, that doesn't make any sense. Joe, why would somebody buy it halfway down? That's why I'm better than 99% of y'all. Because in order for something to go up in value, it can't come back 100%. The mind makes you think that stocks go up in price and back to the same price that it came from, then up in price, then back to the same price it came to. That's not how stocks work. They stair step up at like a 45-degree angle. So when they go up in value, they pull back about 50% before going higher. Okay. They pull back 50%. And they form what we call a flag formation. They go up 50%. They go up, come back about 50%, and then go higher. How do I know this? Because I've been trading forever, and I'm better than anybody that you think can trade. Okay. And I go back here and I say, all right, Joel, I'm going, if you had a Fibonacci tool and you were able to kind of figure out where these areas are, you're going to notice that we come back about 50% of that move before going higher. How did I know that it was going to go back to 50% or 75 or 50 to 75%? Because if you got a bullish stock that's going up in value, it's not going to pull back 100% of that move. And that's where y'all are waiting for. Y'all are waiting to get Palantir for the price that it was back when it IPO'd. That makes no freaking sense whatsoever. If it happens, then something is wrong with the company, and Joel ain't going to be in this company if it's going to go back to its what? I'm not waiting for it to go back to $6 and $85.84. Some of y'all are like, I'm not buying this, Joel, unless it goes to right here, because I was taught in this $20,000 class to buy double and triple bottoms. That's why you missed out on money, and you need to get your money back from whoever the hell taught you that crap. Because stocks move at a 45-degree angle. They don't move at a 180-degree angle. And if it's moving sideways, you ain't making no money, and it's ranging. And I get it. You can make money when a company ranges. But today, we talking about investing. And as a trade, look at that. Look how easy you would have known to get it here, get it here, get it here. You could have drawn this line way back on this day. You could have literally connected this line and said, if it ever comes back to that line, that little old line y'all don't want to buy, I could have made some money on a trade. So I talked about trade and investing. All right. I do that on purpose to kind of make you guys understand the difference. Trading is about momentum, getting in. It's not going to pull back 100%. It's going to pull back 10 or 20. You get in, and then you make money as it goes higher. You figure out where those levels are when you use something like a 513 cross. Look at this. When the 200-day was moving up, as long as this 200-day was moving up, I literally could have caught every single one of these trades right here. Look at that. 7 days. If you're trading 3 and 4 days, 3 days. I could have caught this right here, 7 days. I could have caught this right here, 7 or 10 days. I could have caught this one right here, another 10 days. And y'all out here talking about how hard trading is. Who you learning from? Not me. Because this stuff is dumb easy. Dumb easy. All right. You guys got to learn the same thing. All right, cool. I spent a lot of time on that one just to kind of give you guys a gist of what to look for. Now I'm going to try to get through everybody's stuff. All right. All right. The BK Dot said, "What's up, Joel? Are you FBA? I don't know what FBA is. Fully, what's FBA? I don't know what FBA is." All right. Tar Heel Warrior said, "I know it's not a stock, but a sector. I have a play in DPST, 3X regional banks, wondering what your opinion would be. I don't have on my glasses, guys. Would be to take profits and get out or let it run." All right, cool. So let's look this up. DPST in the place to be. 3X regional banks. All right. So my thing is this. It's up 14% right now today. All right. They're in a index where it's involved with banks. It's kind of like the Dow, but it moves 3 times the amount. So if you bought Wells Fargo or any of the banks that are out there and they're up 3 or 4%, this is going to be up triple that amount if all banks are up today. Now, I always come in and look for the bias. All right. If the 200-day is angled up at all, then the bias for me is going to always be to the upside using the what would Joel do method of trading and investing. First of all, I got to understand the bias. Once I find the bias, then all you got to do next is use a 513 cross, and I know when to get in. Bam, bam. Joel, it can't be this easy. It is. That's why I trade better than anybody that's in the room with the most simplistic tools that are out there. I'll challenge anybody because I rarely lose. All right. All right. I'm going to look at every single solitary stock that we look at today is going to have the same pattern. And here's the thing, guys. Some of you guys know patterns of certain stocks, and I get that, right? When I first started trading, I traded Apple and silver. That's all I traded. I didn't really need any indicators because I knew what Apple was going to do. I knew what silver was going to do, and that's all I traded every single day. Woke up, traded Apple. Woke up, traded Apple. Woke up, traded a little silver. All right, I switched it up. I was trading silver futures and Apple stock. So when you learn the mannerisms of one company, sometimes you guys can pull up indicators that work perfectly for that stock, but then the minute I pull up another stock, it doesn't work. I see a lot of you guys doing that. You're taking training from people that only show you one indicator, and they're the best at training you. And that's when you guys come to me, you're like, yo, this person trades this and this. It might be gold and Bitcoin. And then they'll use an indicator that works on all of those, but on gold and Bitcoin. But then when you try to pull up Microsoft or Apple or Google, they're wondering why it's not doing the same thing. Well, that's the reason. That strategy is not sound for all stocks. Like, I'm well-rounded, right? I know y'all hate when I say this. Maybe I'll use Michael Jordan or Kobe, because anytime I say LeBron, my DM blows up. DM cry. All right. If I was Kobe has a well-rounded game. He can go on any court, he can go in any city, and he gonna put up his numbers. That's how I feel about my strategy. It don't matter what asset class you look at, Bitcoin, Forex, futures, crypto, it's the same patterns all the time. 200-day moving average, 513 cross. That's why I say use a lot of the indicators. That's why I can look at any and everybody's stock as long as it's $1 billion or higher, and I can get the same patterns every single time. 7 to 10-day trends, 200 days angled up, you know to trade to the upside. 200-day is angled down, you trade to the downside. Keep it freaking simple. Super simple. All right. So if you were in this and you got this big move today, I see why you might have taken trades here. Now, the question is, was this a trade or an investment? If it's an investment, then you need to stay put, because look at how much money you can possibly make. You know, it's $100 stock that can go to 600. That's a 600% return. Well, 500% return. The 200-day is angled up. The week chart is now starting to angle up, which is funny. We must have looked at this another time, but the oh no, this arrow is just from what I'm just created. But the 200 week is starting to peak up, and the 200-day is angled up. This looks like a company that's now starting to turn around and maybe start going to the upside. All right. Doesn't mean that it's going to happen, but 9 out of 10 times, that's probably what's going to happen. All right. Good stock. Let's look at the next one. Hey, thoughts on Kava? All right. Thoughts on Kava long term, currently on 10 shares at an average of 67.36. So let's look at Kava. Kava's a popular one because Kava is doing its thing. Doesn't mean you guys should buy today, because look at this. The all-time highs is now. I don't like buying things at all-time high. But Joe, don't you said buy things that are moving up in value? I do, but I ain't buying it at the all-time highs. I don't want to be the highest price house in the neighborhood. I'll wait until I can get it on sale 20 or 30% as a trade. I don't buy anything unless I got a little bit of equity in it. I'm not buying it at the all-time highs. Sorry, I missed out, but I got a little bit of it, and which sucks because I could have got it at 80. Y'all see this back when back when, what was this, August the 12th? I don't know what day it was when the VIX hit 30. I mean, VIX hit 60, but it was the perfect opportunity to buy this stock. And literally within 2 weeks, you could have been up from these lows till now. Do y'all know you could have been up 50% in this stock that we talk about every other day in the room? Now, am I going to buy it here? No. Am I going to trade it here? No. You missed it. But Joe, this is the only time I could have made money. No, you could not. You could have gone way back here, used the what would Joe do method, said the 200-day is moving up. Jordan said that every freaking stock that we look at today is going to have the same pattern. Now, mind you, I'm not just picking and choosing which stock to look at today, guys. I'm literally just going down the list. I know it's hard to believe. It's hard to believe. You spent all this money, and this brother just came in and broke down the whole market in its most simplistic way. That's what I do. All right. So you looking at the market. Look at all these times you could have bought Kava. The problem is, would you have bought it there? That's where the problem is. You've been learning the wrong way of getting in things. That's why it's so hard for you. It's hard to be like, I'm going to get in this at $70 when it came from 58. If this thing just ran from, now mind you, it went down for 14 days. Then it started to go up. Who in their right mind is gonna buy this stock right here? Joe, I ain't never heard nobody teach to get in way up here. Well, that's because the person that you learning from ain't showing you no receipts, because everybody who's out there is teaching this the wrong way, which is why they don't show their receipts. I show my receipts. That's why this seems foreign to you, because you're like, this don't even make any sense. It makes sense now that every single solitary stock that we look at, it didn't matter if you got in on day 3, 4, 5, 6, 7, 8, you still made money because the fundamentals match the technicals. And when that happens, that's when things run. And I understand how companies Like this company could be buying its own stock. Do y'all know when the VIX hits 40 and 50, that's when major companies reinvest in their own stock? Bet you guys didn't know this. Bet you didn't learn that in your $20,000 class. If you know your company and you know when it's about to make money, and the law says that the company is literally like insider, it basically is insider trading. The government has allowed companies to reinvest in their stock. That don't even make any sense. How can you reinvest in your own company and you know what the future holds? Why wouldn't they buy their company when the VIX hit 30 or 40? They're like, oh, the VIX hit 30, 40, or 50. We all know that that's the short-term low. 95% of the world don't. This is when we need to get in our companies or start buying our stock back. And they're buying so much stock, they can't buy it in one day. They're not like us. I can buy one share and then in the next minute sell that one share. It takes them weeks because they're smart also. They're not going to put all their eggs in one basket in one day like y'all do. They're going to invest just like Joel does, slowly, methodically, and it takes time. That's why it might take 10, 14 days for this to start picking up some steam and before it starts to go sideways. And then when it starts to sell off, we all know if it went up for 30 days, it can't go back to where it came from. So if it went up 30 days, probably going down for 15 days. Makes a lot of sense now, don't it? It drops 15 days, went up 30 days, drops 4, 5, 6, 7, 8, 9, 10, 11, 12 days. And then guess what, guys? It's time to make money again. Joel, it can't be that easy. It is that easy. Joel, you know what? I want to learn what you're learning, Joel. Teaching Joel, but I took this class and it was 17,500. And I really believe because of, because they talk about commitment and, I got to put up another $5,000 in 3 months. And because I committed to this strategy, I think I'm just going to go ahead and continue learning this strategy that doesn't work. This is how y'all come to me. Like y'all come to me saying, I think I'm just gonna try to stick it out because I know it's just me. If I just put in the time and I learn what they're teaching, then I think I'll finally get it. And you don't realize you're getting bamboozled the whole dang time because you're talking to somebody who ain't showing what they actually doing. Cut that zero. Write it off as a loss. Start learning this on your own. I'm showing you guys this for free. All right, let me take this off so y'all can see. I rant because I've been where you guys are. I rant because everything I'm telling you guys is something that I was going through when I wasn't making any money. And now that I'm making money, I'm like, I can't believe that's why I get so upset when I see things like this, or when people come to me with all of these horror stories. You got to understand, when I've done thousands of consultations. I know any and everything that y'all are doing. I know the stories. I hear the horror stories. I know the people that are teaching y'all terrible stuff. I'm teaching a lot of the people that have, because of confidentiality, I can't name names. But some of these teachers and gurus are now coming to me like, Joel, I feel bad now that I then took all these people money. Can you kind of show me what to do? Or they want to kind of figure out, Joel, why is what Joel doing working and what I'm doing not working? All right. Learn this stuff. Learn the fundamentals. I'm here to teach you guys the fundamentals. Only about 30,000 people in the room. I can't save the whole world. But if you're here today, you can kind of understand this stuff is easy. Don't make it hard. All right. All right, cool. My second, third, fourth rant of the day. All right, but Kava's moving. Y'all already saw that. We talked about it earlier today. I think it's a company that can get to 30, 40, 50 billion dollars in size. It's going to take years for that to happen though. You're going to experience 30 and 40% drawdowns. A drawdown is when it sells off, when you hear that particular word. You're going to experience 30 and 40% drawdowns. There might be a whole year where it just goes down like in 2022. Okay? But if it's something that you're holding and you really believe that it's a growth company, add to that company. If you're trading it, it's different. If you're in this trade 10 days, get out after 10 days. If you just made a whole bunch of money off earnings and you're trading and you're still trying to hold it to make even more money, then you don't know how to trade, because today is the day that you cash out. It's probably now, this doesn't mean go out there and short, because you're still dealing with a very, very bullish company. But even during this session, the highs was 129. 125. I told y'all I need my glasses. And what? It's dropped about $1. All right. So, I mean, it's still holding firm. All right. But that's a good company. Good company, good company, good company. All right. A bunch of happy Fridays. Happy Fridays. Happy Fridays. Joe, quit saying happy Friday. Why are you always saying happy Friday? You can't possibly be happy every Friday. I'm happy every Friday. I'm probably hitting the golf course. I used to hit the club. I got too old for the club. I was the old man in the club. I was like, God dang, I'm the oldest dude in this mug. So now I'm on the golf course. So I'm happy every Friday, because when I leave here today, I'm going straight to the golf course. All right. I love Fridays. Fridays, the end of the week. You know, I can do these videos with you guys. I can do my thing. All right. So when I say happy this and happy that, I am truly happy. Sheena said, Joe, happy Friday. Happy Friday, everybody. Happy Friday. Happy Friday. Happy Friday. All right. We already looked at Palantir. I think we already saw this one. Yeah. You own 10 shares. It's the Mediterranean version of Chipotle. All right. Anthony said, let's look at Google long term. And guys, there's two different Googles. Did y'all know that? There's two different Googles that you can invest in. You got Google GOOG, and you got GOOGL. Same stock. All right. But you can invest in A or the regular one. So there's a class A version and then there's a class C version. Why? Because they got so much money, they can just do that, right? So same pattern. Joel, it can't be that easy. It is that easy. It is. It is. Let's do the counting system again. If this bad boy went up for about 21 days, expect it to drop half that time. Expect it to drop 50% of the move. This Fibonacci retracement tool. Why are y'all not using it? Look at there, Joel. It can't be this easy. Joel, I can't believe it. I can't believe it. You are so right. How is it that every chart that you pull up is the same pattern every single time? Because y'all ain't learned the fundamentals of the market. I'm sorry. Y'all haven't. You got too many indicators on your chart you can't see. All right. Take 13 of them indicators off. All right. Learn how to draw a trend line in Fibonacci, and this stuff will become easy. Google ran from 131 to 192. But Joel, on TV, they were saying how Google's about to they got a monopoly, and because they got the antitrust lawsuit, do you think Google's gonna be around in the next year? And I started laughing. I'm like, are you serious right now? But these are questions. I laugh at you guys because I used to think the same thing. Anything that I'm not anything that y'all feel like I'm laughing at you for, I laugh at myself. That's why it's funny to me. All right. Google ran, it dropped 50% of this move. And where was that 50%? at the 200-day moving average. And when did it hit that 200-day moving average? When the volatility index popped to 65. Bam, mic drop. That's how you create your own crystal ball and kind of figure out what you think is going to happen with Google. Do y'all see any indicators other than 3 moving averages on my page? Yeah, Joel, but I want to be the one to catch it right here. Great. That's when the volatility index hit 65. You could have been that guy. But if the volatility index wasn't above 30, I guarantee you ain't catching that move right there. I tried it. It can't be done. Or thinking that you can reverse it right here. I'm just going short Google because it's just too high. And I'm tired of it. I got a system. When everybody starts showing receipts, I'm just going to be the black sheep. And then I'm going to go in the reverse. Because these cats don't know what they talking about. Joe don't know what he talking about. Look, anybody that tried to trade against anything I'm doing, they ain't in the room no more. A lot of you guys have seen me drive off other big name traders. And I embarrass them so much they can't come back in the room. I love doing that. I'm an athlete. It's funny to me, especially when y'all come at me with this ridiculous stuff and then try to challenge me. And I'm like, y'all realize I show receipts freely. I show you what I'm doing freely. Hey, you really want to challenge me? Great, let's do this. And then you don't see them no more. And they don't come back in the room and say, Joel, that was a great thing that you did. You was right. Nah, they go off, tail between their legs. And I'm like, don't challenge me on something that is this simple. On every single chart that we look at, it's the same pattern. But this is what you guys do. I'm just going short because today is Friday. Joel, I got a system on Fridays. I short the market. And then on Mondays, right around 10:13, I buy everything back. I guarantee that strategy will not be around in the next 3 months. That's just like saying, hey, I think it's going to hit black or red on the roulette table. Yeah, you can get you a nice little run. I do it all the time. I'll see black hit 3 times. I'm like, all right, red's coming soon. Then when red don't hit, what do y'all do? Well, I'm just going to double down because if I just keep doubling down, I'm going to make all my money back until you see black run 37 times. I've seen this happen, guys. I've seen black run like 37 times in a row and bankrupt everybody on the table. I've seen it. All right. Those types of strategies only last for a certain amount of time, but it's not consistent. It's going to hit red one day. All right. But these strategies that I'm showing you are fundamentals mixed with the technicals on a very basic, just in a very basic and methodical way. All right. So Google, what's happening right now? Well, it tried to do a little cross and make you a little bit of money. Everything is telling you to stay with it. Now, this individual said long term, so I am showing this as a trade. Well, as a long-term trade, I don't even have to look. If this 200-day moving average is angled up, I have to stick with this stock. That's just how things are. Like, this is telling you that the average price of Google for the last 200 days is increasing. So why am I going to get out just because it sold off 18 or 19%? That's usually when other traders who have not bought Google have finally able to create a position. Now, if I was looking at multi-year, because long-term is subjective, long-term can be 3-4 years. It can be 1 year. Some people actually think long term is like 3 months. So I'm going to assume that it's years. And if you look at this 200-week moving average, Joel, are you telling me that when it hit the 200-week moving average, all I had to do, yep, you could have been that dude that bought it finally at the lows. I didn't need 27. I didn't even need a reversal indicator to show me this. Y'all out here using reversal indicators, Elliott waves. Like, it's funny to me because I've done that crap. When it turns around, it turns around. Like, why do I have to sit here and put 57 indicators when all I had to do was draw this one little line? One little line, one little line, one little line, a trend line. It's called a trend line for a reason. Most of y'all don't even use them. Joel, I don't use them trend lines. It's too basic for me. I need something advanced. Great. Lose money then. Doesn't make me none. I'm trying to keep everything simple because I'm trading and investing and intraday trading, and I'm going to the golf course for 4 hours every day and doing yoga in the morning and spending time with my family in the evening. Very well balanced. In order for you to be able to do that, you can't complicate your life. You got to be able to simplify things so that you're able to do all the things in life you want to do, which is why I created the 9 to 5 method for you 9 to 5ers that are out there that want to trade and invest in the market and don't have the time to do it. It's because you haven't simplified it enough to be able to understand what to actually look for. Google hit the 200-week moving average. It broke this little line here. The TTM trend started to go green. Easy breezy, you made a whole bunch of freaking money. You pull up the 200-day moving average. It's the same thing. But Joe, I need to see it when the 200-day is down. Well, when the 200-day moving average was angled down, it's the opposite. Y'all see how these moves are even bigger? Joe, how did you know this? They talk about the 200-day moving average every single solitary day on TV. They talk about the volatility index every single solitary day on TV. You talking to Uncle Bill and Uncle Ted about trading and investing, and that's why it's hard. All right. 200 days angled down, stay away from it or short it. 200 days angled up, the best trades are going to be to the upside. If you want to be the black sheep, this is how you be the black sheep. Wait until the 513 cross. It's going to be half this time frame. It's going to be very quick trades. When you're dealing with a bullish stock that's going up in value, if it went up for 30 days, you can't expect it to go down for 30 days. Maybe half the time. That's how you counter trend. And stop using counter trending tools. They don't work. They don't. Use your eyes. When the trend change, why do I need a counter trending tool to tell me that this is short and it's red and red, short, green and blue, up, red and red, down, green and blue, up. Y'all make it hard. I don't. All right. Hit the 200-day moving average. I guarantee when it hit here, look at where the VIX is. I guarantee when it got close to this 200-day, where's the VIX? Usually when it's coming down to the 200-day, the VIX is probably above or close to 30. Same thing. We've been talking about this for the last decade. I'm almost sick of talking about it. All right. So that's Google. All right. Let's go to the next. AMD. AMD. All right. Advanced micro devices. All right. Why do we like AMD? Because AMD is a baby NVIDIA. All right. We haven't used Yahoo Finance today. Let's check out Yahoo Finance. So on Yahoo Finance, let's see where AMD is, right? AMD. Uh-oh. There we go. Oops, that's cover. Pull up AMD. AMD. Using this chart. $250 billion company. All right. Beta 1.6. It's a very large company. But Joel, you said it's similar to NVIDIA. All right. So when you pull up NVIDIA, How big is Nvidia? Whoa, 3 trillion. Joe, you mean to tell me Nvidia is 10 times bigger than AMD? Yeah. And it's the baby Nvidia? Yeah. And don't you talk about making 10 times your money? Yeah. Watch this. Companies like AMD are going to drop. Joel, must be something wrong with AMD. Nvidia going up, AMD going down. Well, if I had a whole bunch of money and I'm in Nvidia and it's running, why am I going to get out of it? The only time I'm going to get out of Nvidia is when Nvidia starts to go down. And if it starts going down, I'm going to run and look for the second and third and fourth largest company. Okay. 200-day moving averages angled up. So you guys should have stayed with AMD. AMD hit a high of 227.30 and it dropped all the way down to the 200-day moving average here, which was, I can't even see the date. Let me move this up here. Let me move this out the way, Kevin. All right. It hit the 200. It got close to the 200-day moving average on April the 30th. Gave you a nice little run here. So it had a bearish cross, went all the way back to the 200-day, formed a head and shoulders pattern. You guys can learn that through candlesticks. Everything doesn't go up forever. You would have known that the trend was changing just by drawing this one little line under here, so that when it broke that trend, you would have been like, oh no, I didn't need 57 indicators to tell me this. Where do I think it's going to? Well, the 200-day moving average is angled up, so it's probably coming down to the 200-day. Once it got down to the 200-day moving average, it went kind of sideways, went up. Then the VIX hit 65. And when that happened, anybody who's never invested in AMD probably bought some. Now, what if I told y'all that after the AMD hit, after the VIX hit 50, all you had to do was wait until this turned green? Joel, don't do it. Don't do it, Joel. Don't tell us how easy it is. I'm tired of you telling us this. How many days you think it's going to go up? 1 day, 2 days, 3 days, 4, 5 days, 6 days, 7 days more. 9 days. It's 10 days up. Is today the day that you get into this long? No. Stocks trend 10 to 14 days. It's probably going to do this right here. Probably going to go up, hit this, come back halfway to about 133, and then maybe go up here. Maybe it goes sideways. I don't know. As a trader, this is what's important. As an investor, this is what's important. Two different strategies. All right. As an investor, all I'm thinking about is, well, if it came from this low to this high, Joel says that stocks that make you a whole bunch of money probably going to pull back 50%. Because that's what they do. Does it mean that there's something wrong with the company? No. That's why at this level, a lot of people bought at the 158 level. Okay. So in my opinion, anything under 158 is on sale. It's on sale right now as an investment. Right now, it's on sale as an investment. It can fall as low as 100. So doing the math, if I buy something for 150 and it drops to $100 and it loses $50 in value, my downside is 30-something%. So if you can stomach a 30% drawdown, buy AMD today. If you're trying to wait for it to come back even more, I tell people I don't know, because stocks like this don't give you a chance to buy it less than 50% off. And right now it's 30% off from its highs. When it got down to this low, it was literally almost 50% off, because what? It was at 227. So 113 would have put you at the 50% level, and it got close to it. It was like 45% off from the top. Stocks like this, you go all in when you see stuff like that. Off 45%, a stock can be off 45%, guys, and you can buy it right here. And if it goes back to its all-time highs, you're up 85%. How is that, Joel? That's like magic. How can it be down 45, but then up 85? You got to do the math. You got to do the math. Math with an F. All right, cool. So that's AMD. How much time we got? 15 more minutes for my tea time. All right, I'm gonna try to get through the rest of y'all stuff. All right. Crystal said I had some for the first time a few days ago. It's okay. She's probably talking about Kava. All right. Yolanda said Nike is doing well right now. Okay. Let's look at Nike's chart real quick. All right. So you see how Nike started to go down in value? Now, guys, I was in Nike just like everybody else. Every now and then you're going to get sucked in something like this. Nike hit 180, dropped to the 200-day, couldn't hold it. Now the 200-week moving average is angled down. Now, if you were looking at the 200-day moving average, you would have known to get out of Nike right around May of this says May 2022. Guys, you should not have been buying Apple since May of 2022 if you had just pulled up a freaking chart. I didn't need Uncle Bob to tell me to get out. I didn't need naysayers on TV. All I had to do was look and see that this 200-day was angled down, and I would have said, uh-oh, spaghetti-o, I don't need to be in Nike. And from May 2022 all the way to now, you could have saved yourself some money. Now, do you get in way down here? I don't know. The lows are way down here. You might as well wait for it. Y'all see how I got an alert right there? Maybe it gets to 60. It got all the way down to 70, which is kind of close. So, am I going to wait 10 extra dollars if I've been waiting a whole year to get in Nike? Nah, you buy it in stages. Maybe put 1,000 in today. If it gets lower, put another 1,000 if you're going to do $10,000 in it, and then wait. If Nike ever goes back to its all-time highs, doing the math, if this is even worth buying, you're going to make about 120% return. In my opinion, why would I buy something like a Nike that can make 120% return when I can buy something like a Deckers Outdoors, which is killing Nike, and I can make way more money, I think, in my opinion, for a company that has growth potential, or buying a company like On, which is my favorite. Now, On Holdings, no, that's On Semiconductors. So On is On Holdings. Look at this. Look at this chart. I've been telling you guys to buy On way back here when the 200-day started to angle back up. $30. It's at $44 now. It's heading to 55. It's going to get there. Okay. Nike is going down because people are taking their funds out of Nike. Think of common sense. If I see something failing, I'm going to put it in something that's not failing. Nike's failing. I'm going to rotate those funds. I want to be in the same sector, so I'm going to throw it in something like a Deckers Outdoors or On. Okay. And now you see it going up in value. These companies are smaller, so they can grow faster. Nike can drop 20%, but because the company is so big, those funds that they used in that company, if they put it into another company, it's going to make that company grow even faster because they're not used to getting an influx of $100 million or $10 million that they took from Nike. It might not affect Nike that much because Nike is such a big company. Okay. All right. Ziomex said, thank you. We'll make sure to add my position if they do pull back. I think that was for a stock that we looked at earlier. All right. Someone, SJ said, what about TLT after Jerome spoke today? So the TLT is the Treasury Index, guys. You got your Treasury and bonds. So if you were looking at Treasury, the 200-day moving average, guys, is angled what direction? Up, which is not good for the market. All right. Treasury bonds is angled up. Look at when it started to go up. Way back here on July 2024, it went up, came back about probably 50% of this move. Y'all see that? And now it's heading higher. So, as a trade, it should go a little bit higher. It might go sideways because remember, look at these trends. Every time it trended to the upside, it trended for about 10 to 15 days. Well, it's been about 21, 30 days. So it's probably going to take a breather before it goes a little bit higher. If I was looking at it on a week chart, this is why everybody stayed away from treasuries and started putting their money into the stock market because there was no money to be made here. And I still see a bunch of you guys throwing your money into freaking treasuries. And I'm like, yo, from 2023, it went down in price. Yes, Joe, but my mother told me that putting my money into treasuries was the safest option. And now your 139,000 is worth 100,000 in freaking 3 years. When all you had to do was pull up a chart, and this is the lie detector, and the lie detector says that money is coming out of this. I don't care what they're saying on TV. If I see money coming out of an industry, I'm running as far away from it as possible. I'm not interested in this until I see this 200-week moving average start to angle up. But it's got to have a 200-day move up, and it just started moving up literally July of this year. So for 3 years, you should have stayed away. This is probably the time to look at TLT. That's a good one. All right. Someone said Doji as an investment. All right. So let's look at Doji coin. I can't pull up Doji here, but I can pull up Doji on Yahoo Finance. So when you pull up Doji coin, did y'all know that Doji coin was a $16 billion coin? What? It's only like 11 cents, Joel. I didn't know that the company was worth the coin was worth 16 billion. Yeah. Did y'all know that Bitcoin, the asset that's worthless, is snake oil, Joel? Ooh, y'all know I own 2 Bitcoins, so I'm happy that I'm up $5,600 today. Is worth 1.2 trillion, but my daddy said it's snake oil and to stay away. Well, your daddy lost you some money. And Bitcoin is very, very bullish. So I'm looking at Bitcoin because Doji coin will go up in value if Bitcoin is going up in value. So I'm gonna start looking at the ETF for Bitcoin, because you guys can buy this right now in your portfolio. Like I own this in a portfolio, like I own this in stock form. And look at what just happened. In the last 3 or 4 days, it started to go up. I bought some down here at 49.97, and now that bad boy is sitting at 62,000. And I told you guys to buy. I bought it at the bottom. But now I'm really holding on to it because the 513 cross just crossed, and this is blue. And I'm going to ride this puppy all the way up to about $68,000. Why do I think this can continue to run? Well, it has been going up. This is like the 4th day, but in actuality, it has only been going up for 10 days. So that's a 15-day run. This looks like a 30-day run. This is about a 10-day run. So this could go sideways, but we should hit maybe 68, maybe even 70. And then we're going to need a catalyst to make it go up. Now, here's the thing that a lot of people don't know. Bitcoin usually runs up in November. That's a gem that I'm giving you guys. Literally after Thanksgiving, Bitcoin just starts to run. I don't know what it is about the seasonality of that, but it usually runs up after that. So if Bitcoin is running, then yes, you want to buy Doji coin. As long as Bitcoin has a 200-day moving average that's angled up, you stick with all of your cryptos. Or you find some type of crypto that's similar to it. So once the Ethereum, they have Ethereum stock, like there is a GBTC type stock that you can buy, but I'm waiting for the bigger ETFs to come out. All right, I'm trying to get to everybody's stock. Yolanda said, please check Serve. All right, so if we were looking at Serve Robotics, let me look here to see how big Serve is. I don't know anything about Serve. Serve Robotics is all right, so this is a penny stock, guys. It's only worth $402 million, which is cool for me to show. But stocks that are this small usually doesn't get any attention from Wall Street. So I tend to not like to look at these, and the patterns are not going to be the same. Once it's over $1 billion, you're going to see the patterns fall in line with everything that I showed today. But anybody that's into like penny stocks, don't come and use the what would Joe do method, because penny stocks just run depending on whoever buys it that particular day fundamentally. But it's a $400 million company. Its charts are telling us that it's starting to sell off, right? So until it breaks this trend line, it's going to keep going down in price. All right. Now this is about the 50% area where, when stocks usually run, they'll pull back about 50%. So once it broke 50%, it's probably going to $7.50. Probably $2. So you have to be careful. This stock has to break this trend in order to go back up in price. If it can't break this trend line, it's going to keep going down in price. All right. Ronald says, what are your thoughts on NXC, Next Gen Energy? All right. NXC. I was looking up Next Gen the other day. 200-day is angled up. 200-day is starting to flatten out. It's pulled back about 50%. It still looks pretty good. The week chart is in. Oh, look, the week chart is still in play. And look at what it did. It came down to the 200-week moving average perfectly, and then started to rise up in price. But until it breaks this trend, it's going to continue to go down in price. And I don't like that this is red. You do have a green candle down here on the TTM trend. So maybe it's starting to turn around, but using the what would Joe do method, this still looks short-term bearish, even though it looks long-term bullish. All right, we looked at TLT already. Andrew said, "What up, Jay?" Kavan said, "Hey, please, Joe, can you check out SHW?" All right, let me look at SHW real quick. Woo! 200-week moving average angled up. Bad boy sitting at all-time highs. I'm not going to get in it way up here. When stocks run like this, give it a chance to pull back a little bit, at least 50% of this move. But if you're in it long term, stay with it. If you're trying to find a time to get in this trade, you missed out on it, because when it hit this 200-day, Joe, I'm sick of seeing this. I'm sick of seeing this work. I'm sick of seeing it hit the 200-day and just rise like nothing. 513 cross happens and it keeps running up in price, and dang, another 513 went off here and it ran for another 10 days. All right, I'm sorry that I created a strategy that works, but it does. All right, and Sound. All right, so Sound. Why was I buying Sound? Sound was going to be on the list of things that we looked at today as stocks that you should invest in, because NVIDIA is investing in Sound. Sound, guys, is SoundHound. Anytime you want to figure out a song that you like, you can take out SoundHound and it'll tell you about that song. Well, SoundHound is involved in AI, and with that artificial intelligence, they're going to use the sound or you speaking into it as a way of, like if you're in your car and you use SoundHound and you're like, hey, can you find this for me? Or can you do this for me? They're going to use SoundHound technology. Anytime I see the second or third largest company on the planet buying it, I'm going to buy it. I'm going to buy some too. And the reason why I really love this stock is because it has a $1 billion market cap. These are companies that I will buy all day, every day to try to get my 10x. All right, trying to get everybody's stock in. Mike, ain't heard from Mike in a minute. What's going on, brother? Brother from another mother. All right, we got all right, we looked at Google already. So that's cool. Sorry about that. Trying to get to everybody's stock, Kavan. What's up, Shamika? Happy Friday. We did do sound. Yes, we're doing sound. Well, we just did sound about 5 seconds ago. Crystal says, "Do you see Google going to 175?" We already did Google, so sorry about that. Just trying to get to some stocks that we've already seen. Hopefully, I answered that question for you because I need to get out of here to get to my tea time. Thoughts on AVGO? All right, I'm gonna look at one of these. All right, Chris just put up all the semiconductor stocks that are out there. So AVGO is Broadcom, SMCI is Supermicro Computers. They're all investable companies. If you're into the semiconductor space like Nvidia, these are stocks that have growth potential. AVGO is dang near just as big as almost as big as AMD. So I would put those in the same boat. SMCI I would watch, but you know they had relations with with Nvidia, so you had a lot of people that were buying it. But SMCI charts got really bad, and the stock started to sell off really hard lately. Now, the 200-day moving average is still angled up on SMCI. The week chart is still angled up. So you can still invest in that particular company. Just to give you an idea of AVGO, because we talk about AVGO during every session. AVGO dang near hit an all-time high. If you were interested in buying AVGO when the VIX hit 65, should have been when you got into it. 200 week is still in play. Look at how it gave you a chance to buy it at the 200-day moving average. Look at that, guys. 513 cross. You made money for about 9 days. Looks like it wants to take a breather. All right. We looked at the SPY earlier, but we'll look at it again. Did we look at the SPY? I don't think we did. All right, this is the SPY, S&P 500. Guys, we are like 1% from all-time highs, but the economy, Joel, is terrible. Yeah, but the 500 largest companies are doing well, and they can't do well if y'all ain't investing in them. So whatever you hearing, whatever horror story or tear jerker that somebody's telling you, they're not looking at the market. S&P 500 is dang near at its all-time highs. We'll probably get through it. I really don't like investing in stuff at this particular time. The only reason why I did it was because the VIX hit 50. Usually before an election, I usually chill until after November 4th. I would advise you guys to do that as well, unless you're really good at charts and you're trading. It's a very good trading period. But as you can see, the market is sitting at all-time highs. Week chart is still in play. So the game is up, not down. Please don't short the market because you think that the market is too high, because you will get steamrolled. All right. Any unusual options on Nvidia? All right, so let's look up Nvidia. What he's talking about is options. So if we were to pull up options, and I don't know what today's date is, but I'm assuming that next week is August the 30th. There is unusual options activity at the 130 strike. You got 119,000 open interest at the 130 strike. The reason for this is because Nvidia has earnings next week. So anytime you have earnings next week, you're going to see plays like this. Usually what I like to see is when there aren't any earnings and somebody got some tip and they kind of know where they think Nvidia is going to go to. All right. So that's a gem for you guys. I think I got to everybody's with three. I went over 3 minutes, which is cool. LeVar said MSTR was jumping out the gym today. He's talking about micro strategies. Micro strategy is like Bitcoin on freaking steroids. And as you can see, taking away the options. Look at this chart. Now look, guys, this is scary. This is showing a head and shoulders pattern. Look at this head, shoulders, shoulders. That's not good, but the VIX hit 65, and now this stock is on the run. If you were using the 200-day what would Joe do trick 513 cross happened here. You get in within 3 or 4 days. Looks like you could have made a little bit of money today using my strategy. There's a trade. There's a trade. There's a trade. You got to have the TTM squeeze or the MACD histogram to do this trade, but it looks like it was a great move. So I got to get out of here, guys. I got a tea time literally at like 3:30. I'm coming to you guys from Decatur, where it's greater. Share this video with your friends. Watch this video multiple times. I'm going to try to do this type of video. I keep saying every 2 weeks, at least once a month. I'll try to pull up stocks. What I would like for you guys to do is, if you see that I like big bucks and I cannot lie, bring some stocks that you guys think have growth potential. And if it has growth potential, let's look at it. Because I love, I'm going to hashtag everything and put it in the room. And I like to use the search tab and kind of go back in history and see if we talked about those particular stocks. Usually every single solitary stock that y'all hear about that's run through the roof, we talked about in the room. You guys just got to learn how to use the search tab and find it. You guys got to learn how to use the Ask Joel GPT and get information on those particular stocks. So I'm coming to you guys from Decatur, where it's greater. Happy Friday, and I'm out of here. Peace.